has been the sector to watch out for. Ramesh Swaminathan, President of Finance and Planning of Lupin, now joins in. Ramesh, hi, good morning. Many Indian companies have recently seen big US FDA issues. Your thoughts on that?
Well, I think you should need to get back to the genesis of the problem. And this has been going on for the past now 5 to 6 years. The genesis of the problem was essentially because of the fact that you had cases of low molecular heparin emanating from China, a case of, in fact, melamine in milk, lead in paints, and of course you had issues with, in fact, Indian companies in terms of fudging data and the like. And all of this actually caused, in fact, the FDA to sit up and take notice, possibly. And it's not as though it's only the Indian companies who have been caught in this boat. There have been companies from other parts of the world, from Teva to Apathics, and of course, companies like Sandoz. All of them also been, time and again, been questioned and given warning letters by, in fact, the FDA. Companies have been closed down also. So I think it's essentially an issue of, in fact, the governing body like FDA doing their duty. So I would, and essentially those companies who have been less than diligent on these matters have actually paid the price for it. And those companies have actually taken it very seriously, and there are programs for actually being on the ball when it comes to, in fact, regulatory or, in fact, GMP issues and quality issues have not been so badly impacted. Of course, there's no gainsaying the fact that there could be an odd inspector who's out there to give you, questions, observations when, in fact, what you think you deserve is 100%. But those would be a smaller minority. But in general, if your programs have been, on the ball when it comes to, in fact, GMP norms and quality, then you are not, not one of those companies who needs to be bothered.
Okay, fair enough. For Lupin in particular, sir, what is the status on the Goa plant? When is the US FDA expected to visit? When was your last interaction? Can you fill us in with more details?
So I think you're now referring to, in fact, the observations that we had on the Goa plant in June. But you'd also be aware of the fact that, we've got approvals for that particular, for products from that plant after the inspection also. So it kind of indicates the fact that, whilst there are observations, it's, they're not necessarily something which is going to derail the process, or upset us in any sense. In a general sense, if you look at, in fact, the observations, you can categorize those into three. The first is where you have no action initiated. The second is voluntary action initiated. And third part where you actually have official action initiated. We believe that most of the observations would be, would not actually fall into the third part.
How's the US business doing for you? Any pickup from the second quarter levels in formulation sales and product approvals?
Yeah, in general terms, in fact, there has been a slowdown, but we do expect things to pick up. We've been one of those, companies who have actually had a fairly good run on the approvals front, at least in the Indian stable, But in a general sense, the entire industry has actually had a slowdown, and we have been also been impacted by that. But we do expect things to pick up, because the GDUFA itself, the way it is programmed, they expect, in fact, the approvals to step up, in terms of cohorts during the course of this year and the next.
Okay, fair enough. What is or when is the company expecting approval on Nexium generic?
We've also been a little surprised. We do expect it to happen anytime, perhaps this quarter itself, or certainly next early part of next quarter. And we do think that we could make a good run on this as well.
What about other geographies, especially India, that grew only in single digits in Q2? Are you seeing any traction there?
US, of course, has been a little lackluster, but India has been growing fairly well. If you look at last quarter, of course, there has been a bit of an aberration there, but the first quarter was fairly good. And if you look at, in fact, the first half itself, the growth rate was well over, it was close to about 14-15%. We do believe that the full year you'd look at an average of about 17-18%, which I think is fairly good by any standards. And if you look at track record for the last 5 years, I think it's been well over 20%. So I think we would get back to those levels, in the coming quarters.
Okay, well, one of the concerns this quarter is that the company saw a steep crunch in margins to 20% versus 26% year on year. What is your guidance on margins in the second half?
We've said this before, the margins actually an outcome of, in fact, the products that we launch and, in fact, the prices. You're aware of the fact that there has been channel consolidation in America, and it has brought in its wake, in fact, a price erosion of a higher magnitude than ever before. price erosion, in fact, over the last 5 to 6 quarters has been an average about 15 to 16%. And in fact, if you look at the first 2 quarters of the current year, I think it's about 5 to 6%. Second, the reason why, in fact, was also the fact that we couldn't actually get any new product to be launched, in fact, of any significance in the first 2 quarters of the current year. So if you look at, so that's the reason why there has been a contraction in margins. But the fact is, when it comes to, in fact, margins actually is a function of 2 things: the products, the newer products, and of course, the cost reduction that happens also. And we have been pretty good at looking at cost reduction or containment. We've got programs of Six Sigma programs running across our factories. We take it in waves. There's a program for procurement excellence. We are actually employing the major operational sequencing techniques for rationalization of the labor. We're actually looking at, in fact, R&D productivity as well as sales force productivity, and a host of other measures to actually contain costs. And I think for that we do. There have been a lot of positive outcomes coming from all of those. And if there has actually been a contraction in the second quarter at least, which is discernible, it's only because of the fact that the top line growth was pretty negligible. But I think with these measures continuing in the third and fourth quarters, and with better products being launched, our margins for the full year could be on an average of about 26%.
Okay, we are hearing of many Indian companies bidding for global assets such as Sun and Novartis in Japan, and Sun and Cipla and Glenmark eyeing Teva's US portfolio. Is Lupin interested in any of these assets or any of the other assets, and what's your M&A strategy?
We've always said that you can break our M&A philosophy into 3 buckets. The first bucket where we actually look at geographical spread, and as you would be aware, we've actually entered into certain geographies in the recent past. We bought into Mexico last year. We made Brazil at the end of last fiscal, but the deal is consummated in the first quarter of current year. Then we entered into Russia, though of course the deal is though it's been signed, it's still because it's also awaiting government clearance in Russia. So to that extent, we've been concentrating on, in fact, geographical spread. The second bucket we could look at, in fact, specialty companies, and to our mind, in fact, brands and specialty would be important because it mitigates the risk of volatility in earnings. And we're still looking around for augmenting, a brand's portfolio in the US and potentially in other parts of the globe also. The third bucket where we look at, in fact, technology companies, and to that end, we actually made an acquisition in Amsterdam, in Netherlands, last year. If you look at our balance sheet, we are quite capable of raising close to about $1.5 billion or more. And when we actually leverage it on the target, it could be a little more than that. We spent about $800 million, when it comes to Gavus itself, and we made the smaller acquisitions in other parts of the globe. So there's still sufficient capacities on our balance sheet to look at other acquisitions. But there's no bravado in our actions, and every proposition that comes to our table needs to justify itself. But for sure, there is room and appetite to take on more.
Okay, fair enough, Mr. Swaminathan. We leave it on that note. Thank you very much for joining in and talking to us. So that's Lupin. In fact, post the statements or during the interview itself, the stock has moved up. Important statements coming in that post the observations in the Goa plant, they have, however, received approvals from that plant in particular. So that's a positive, and that India growth should, in fact, pick up to maybe from the levels that they reported in Q2, as well as the US FDA approvals should pick up in coming days. That was one of the concerns by the analyst community post the